It is 8:02 a.m. Pacific Daylight Time. It is the 16th day of the 6th month of 2026. That's a lot of sixes. There's probably some numerology at work there. This is episode 1342 of Bitcoin, and Musk has already bought his first company post IPO. I know it's not a Bitcoin story, but it's going to probably impact the markets, and the markets impact Bitcoin. You are here on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. Yeah, the Musk story is going to start us off today, but that's not all we got. Kraken launches the CFTC Bitcoin perpetual futures today. And, Strategies, Michael Saylor wrote a little ditty on X, and Helen Parts is going to kind of break it down. He's talking about credit where it comes to Bitcoin. I don't know if I want to hear from the guy right now, but be that as it may, Japan is also in the news because they increased their interest rates. Bank of Japan increased the interest rates. It's impacting the yen carry trade, although the amount of times that the Bank of Japan has already raised their rates, the carry trade may have kind of lost its steam. We're not sure. We're definitely seeing some depressed prices in Bitcoin today, and it also affected broader markets because it's not as cheap as money as you used to be able to get from the Bank of Japan yesterday. So that is impacting markets. Then in the second half of the show, BlackRock has introduced their Bitcoin income fund. So we'll see how that's going for them. Strive acquires 73 Bitcoin. Ledn is going to be talking about the lending markets in Bitcoin. And then we're going to end with Coinbase and the X402 protocol. Well, along with AI agents. Yeah, I know. Everybody's talking about AI because AI is not going away. See, this is the problem that I think people don't understand. Why are you talking about AI on a Bitcoin podcast? Well, because it impacts Bitcoin. It's impacting all the markets. Right now, we're in bubble territory. AI, even after the bubble pops, and eventually there's going to be a pop. It's going to be like the internet. If you don't remember, there was a gigantic internet bubble, and guess what? We're all still using the internet. So this is the way the world works right now. So let's begin at the beginning. Musk's SpaceX buys AI coding startup for $60 billion just 3 days after their IPO. 3 business days, that is. BBC is bringing this to you. Archie Mitchell is writing. SpaceX has agreed to buy AI coding startup Cursor for $60 billion. Elon Musk's rocket company will take over AnySphere, which makes the artificial intelligence coding agent. The move comes after SpaceX joined New York's tech-focused NASDAQ stock exchange on Friday in the largest ever listing, valuing it more than $2 trillion. The companies have been partners since April when SpaceX announced that it had a right to either buy it outright for $60 billion or simply pay $10 billion for the work that they have already done together. Like OpenAI and Anthropic, Cursor's technology uses AI to automate the process of writing code, one of the most prominent current uses for artificial intelligence today. Its tie-up with SpaceX comes as Musk's company tries to catch up with rivals by growing its artificial intelligence business, xAI, which is behind the controversial Grok chatbot. Announcing the partnership in April, SpaceX said, quote, "The combination of Cursor's leading product and distribution to expert software engineers with SpaceX's million H100 equivalent Colossus training supercomputer will allow us to build the world's most useful models, end quote. Cursor is used by major companies including Stripe, Adobe, as well as NVIDIA, whose boss, Jensen Huang, has described it as his favorite enterprise AI service. SpaceX said the deal would be completed by the end of September, with Cursor shareholders paid with $60 billion worth of SpaceX shares. Let's pause right there. They're not paying cash. They're paying in SpaceX shares. So what can we infer from this? Shares of companies, and it's not like this is brand new. It's just that this really paints a picture of what the hell has been going on for a long time. Company shares are being used as leverage to buy other companies. And a lot of times companies will say a cash and stock deal. You know, you're going to pay some cash. You're going to split out some stock a little bit. Yeah. This is all stock. And all this stock has been freshly valued. And yes, there's been a jump in the price of SpaceX this morning as well. I mean, we're looking into the 200s. The IPO opened at 150. So this is sort of, well, it's printing money, except that the value of that money is based solely on the psychology of the market. It's what the market thinks SpaceX is worth. But is it? And I'm not saying that it's not. Hell, I'm not even going to approach saying something like SpaceX isn't valuable. It is. At this point, because of what happened over at Blue Origin with the destruction of whatever it is called, the Dragon rocket or whatever it was, completely obliterated the launch pad. And that was Blue Origin, which is Jeff Bezos' deal. Without that launch pad, that's the only launch pad he had for heavy lift vehicles. Right now, as far as the Western Hemisphere is concerned, SpaceX is the only game in town, and that includes government contracts from the United States and NASA. I mean, NASA can build rockets, but heavy lift, that's going to be SpaceX's bag. We're not even talking about the satellite stuff. We're not even talking about Starlink and how important that actually ends up being. I mean, I've been really critical of Elon Musk in the past. But one thing that I got to say about this guy, he knows who to hire. He may not be the best engineer himself, and he doesn't need to be. What he needs to do is exactly what he's done. Hire some of the best people who know how to hire the best people. It really ends up being that simple. Who to hire? What skills do they have? Where do you put them? And how do you fabricate a corporate culture where they want to stay and have loyalty? And I think that that's where Musk actually shines. Not in his engineering prowess. He didn't design the rockets. He didn't design the engines himself. It's not like he's, draped over a drafting table all day long designing this shit. He's not. He's finding the people to do it for him, and he's finding the very best people. So SpaceX is indeed valuable. But I go back to the premise. Is it this valuable? This deal with Cursor doesn't close until the end of September. What will the price of SpaceX be? Will it be lower? Will it be higher? There's a lot of shit that can happen between here and the end of September. It's going to be an interesting story to watch unfold. Continuing on, SpaceX shares have soared by almost 50% from the $135 offer price, including a bumper first full day on the public markets. The company's listing also made Musk the world's first trillionaire. The valuation of SpaceX is largely based on optimism about its potential future earnings, as opposed to financial results that it has demonstrated thus far. It is currently not profitable. meaning it loses more money from its operations than it makes. No way. I'm glad somebody explained that shit to me. The company lost more than $9 billion in 2025 and 2026 so far, according to the financial filings, due to its huge spending on artificial intelligence and other infrastructure investments. The biggest focus of its business is the manufacture and launch of rockets with reusable parts. SpaceX also manufactures and launches Starlink internet satellites, and through this year's acquisition of XAI, another company Musk owned and operated, it entered into the AI business too. Yes, we know all that there, BBC. So one of my other questions that I've got lingering in my head is, when does Tesla get folded into SpaceX, and why hasn't it already been done? And I think what it is that this is one of the things that Musk is good at, or at least one of the people that Musk hired is good at, is timing. Because think about it. After Friday, Musk dropped a little bomb over the weekend. I think it was on Sunday, that said that he expects $1 trillion in revenue this coming year. I guess 2027 is what he said. That pumped the markets pre-market heading into Monday's market open, which saw a huge gain in the stock price of SpaceX. Then pre-market today, we find out that he's buying Cursor for $60 billion in an all-stock deal, an all SpaceX stock deal. That pumped the market again pre-market, and we've got an even higher SpaceX price. What'll happen to the price of SpaceX if and when he announces that Tesla is going to fold into SpaceX as well? Because it makes sense. It's his company anyway. And then the Boring Company, which I haven't really heard all that much about, but there's some other things that he's got cooking and has had cooking for a couple of years. What does that do? Is he somehow able to manipulate the psychology of the markets in general, which basically means the citizenry of the world, to continuously boost the stock price so that by the time September comes around, instead of having to turn over X amount of SpaceX shares to do this Cursor deal, will he only have to turn over half that, or a quarter of that, or a tenth of that? See what I'm getting at here? This guy, I think he's more able to manipulate the psychology of the markets than people give him credit for, or at least the team of people that he's hired. Because who knows? Who knows what kind of tool set these guys have to be able to do things that were never able to be done before, things like social media, widespread media, digital media, speed of light communications, all that. Maybe he's leveraging that in a way that we've never seen before. I don't know. I've never had a beer with the man, so it's pure speculation, and honestly kind of borders on a little bit of tinfoil hattery, of which I am unafraid. However, we have Kraken on deck. They have launched CFTC-regulated Bitcoin and crypto perpetual futures for U.S. traders. Micah Zimmerman, writing for Bitcoin Magazine, Kraken has switched on perpetual futures trading for eligible U.S. clients on Kraken Pro, bringing the most traded crypto derivatives products under domestic regulatory oversight for the first time at scale. The contracts are listed on Bitnomial, a CFTC licensed exchange, clearinghouse, and brokerage that Kraken's parent company Payword acquired earlier this year. The launch gives U.S. traders access to perpetual futures within the CFTC's regulatory perimeter on a platform they can use alongside spot, margin, and CME listed futures. Perpetual futures track the price of an underlying asset without an expiration date. Unlike standard future contracts, however, positions require no rollover and can remain open as long as margin requirements are met. The structure gives traders sustained leveraged exposure, long or short, to assets that they do not hold in custody themselves. To keep contract prices anchored to spot markets, Kraken's perpetuals use an 8-hour funding rate mechanism. At 7 p.m., 3 a.m., and 11 a.m. Central Time each day, long and short position holders exchange funding payments. When the perpetual price sits above spot, the longs pay the shorts. When below, the shorts pay the longs, according to the company. So that's now live. And it was live, I think, as of yesterday. So we'll have to see what's going on. But continuing, Arjun Sethi, co-CEO of Payward and Kraken, framed the offering around operational efficiency. Oh, yay, quote, "The most useful thing an exchange business can do for a serious trader is to put everything in one place. Spot, margin, futures, and now perpetuals all live in the same account at Kraken, with perpetuals and futures backed by the same collateral, so capital isn't stranded across half a dozen venues." End quote. At launch, eligible U.S. clients can trade perpetual Bitcoin and 8 other assets. Kraken has said it intends to expand both the contract set and available collateral options over time. Products are offered through Ninja Trader Clearing, LLC, doing business as Kraken Derivatives US, a CFTC-registered futures commission merchant. The launch follows a CFTC signal in May that opened the door for regulated platforms to offer perpetual futures. The agency approved Kalshi's Bitcoin perpetual contracts that month and issued guidance that also created a path for Coinbase to connect U.S. customers to global options as well as perpetual markets. So the financialization of Bitcoin and the rest of the crypto field continues unabated, and I don't like it, but there's not a damn thing that I can do about it. And if you ever wanted to know what Peter Schiff has felt like over the last, 40 years, or let's say 20 years, let's say 30 years, he probably kind of felt like this, where the continuous financialization of gold and other precious metals basically sought to suppress the price of gold. And I think that's what all these derivatives products, I think that's what they're actually doing. They're not really built for price discovery. I think they're built more for price manipulation and suppression. Because the only thing that matters to the people in power is the almighty dollar. Whether you're in the United States or abroad, it doesn't matter. The dollar is the world's reserve currency. It's probably going to stay that way for quite a while, even though, yes, we see some people nibbling, some other, currencies nibbling at the dollar's supremacy, but I just don't see the dollar going away anytime soon. And as long as power is connected to the dollar, then everything that can be done to protect the value of the dollar will be done. And it's been that way, and it's going to continue to be that way until we just literally print it out of existence. Let's get on to strategy. Bitcoin doesn't need Ethereum-style yield, says Strategy's Michael Saylor. Helen Parts, writing for Cointelegraph. Strategy Executive Chairman Michael Saylor said Bitcoin doesn't need staking, inflation, or protocol-based yield mechanisms, arguing returns should come from financial products built around Bitcoin. In an X post on Tuesday, Saylor outlined a 5-layer digital asset stack, positioning Bitcoin as the base for credit, money, yield, and equity structure. Saylor said Bitcoin should remain pure digital capital and that it does not need to become Ethereum to generate investor returns. The framework reinforces Strategy's approach to Bitcoin as a treasury reserve asset where returns are generated through financial products built around the company's Bitcoin holdings, the largest among publicly listed firms. Saylor's framework is centered around digital credit as financial instruments built around Bitcoin holdings designed to generate returns while reducing exposure to Bitcoin price volatility. Under this structure, Bitcoin serves as collateral, while equity absorbs most of the price risk and credit instruments receive more stable returns. Saylor repeatedly referenced strategy-style securities such as Stretch, the company's perpetual preferred stock, positioning them as a key example of digital credit. In this framing, STRC-like instruments are not just company products, but examples of a broader asset class built on top of Bitcoin through capital market engineering. Saylor said Bitcoin's volatility isn't a flaw, framing it as a natural feature of high-energy capital that can move sharply because it is scarce, it is global, and traded around the clock. In his model, instruments like STRC are designed to damp those price swings by sitting above Bitcoin in the capital structure. Remember what I was saying about price suppression? While Saylor did not directly discuss STRC's volatility in the ex post, he said credit instruments can experience varying levels of risk depending on factors such as market stress, liquidity, and investor demand. Quote, the important point is not that digital credit always has one fixed volatility number. It does not, Saylor said. Strategy's preferred stock closed at 95.20 on Monday, which was down 1.45%. Those remarks reinforce Saylor's framing as Bitcoin as digital capital and Strategy's role in issuing digital credit built around it, including the view that Bitcoin sales are sometimes required to support the structure. Quote, if the company's policy is that we won't sell the Bitcoin, then the credit won't have value and the equity won't have value, Saylor told Cointelegraph at BTC Prague. That statement, it's okay. It makes it kind of sound that these instrumentations that he's engineered, and make no mistake, these are financial engineering products that Saylor is making. It's not organic. And I had just started talking, or had just been talking about these types of derivatives and futures and perpetuals and all of it as more of a tool of price suppression than it is price discovery. But one of the other issues is it's not just making sure that the dollar remains stable and the dollar remains in power, and that those in power that are attached to the dollar also retain their power. This looks to me like Saylor saying, yeah, we can suppress risk. And I honestly think that there's a bit of hubris in that. You can hold a beach ball underwater for as long as you have energy to do so, but essentially the beach ball is going to win out. Eventually, it'll pop up back above the surface. We saw that with gold. For years and years and years, they were trying to suppress gold. As volatility in the markets just started really ripping and macro events around the world basically started just tearing into people's psychologies, you couldn't hold the price of gold down any longer. And there's no instrumentation that was able to do that, even though these instrumentations have done it for 30 years. I expect the same to happen with everything, like all metals, Bitcoin especially, is that eventually the power that these instruments have they're just going to get tired, and they're going to release the ball, and it's going to pop back above the surface, no matter what Saylor wants. Bitcoin rises after Bank of Japan hike interest rates to a 31-year high. Omkar Godbol from CoinDesk. A bit of a disclaimer here. I think we should wait a little while and let the markets digest the news that the Bank of Japan has raised rates before we start making any kind of, oh yeah, Bitcoin rises. Well, it's gone back down a little bit. We're back below 65 or not below 65,000. Actually, where are we right now? We're at 65,700. And we were above 66,000. We got rejected off of 67,000, and then a couple of hours later the Bank of Japan makes this notice. So let's everybody calm down is what I'm saying. Bitcoin reversed early losses in the Asian session after the Bank of Japan raised interest rates to a 31-year high in its fight against inflation. And that's the real news here, people. That's why I'm giving you this, not because Bitcoin is somehow or another impervious to the Bank of Japan. It's the fact that the Bank of Japan has raised their rates. That's the news. The decision hit the wires around 3:19 UTC, June the 16th. The BOJ lifted its policy rate by 25 basis points to 1% from 0.75%, and that's the highest level since 1995. The move aligned with market expectations, but included hawkish hints of further tightening alongside measures to ease market concerns. The central bank highlighted upside risks to inflation, pointing to a faster than expected pass-through of higher oil prices into consumer goods amid geopolitical tensions. This suggests the Bank of Japan stands ready to hike further if price pressures intensify. After decades of low inflation, Japan now faces rising costs, with wholesale prices climbing more than 6% year over year in May. That's the fastest pace in 3 years. Bitcoin climbed from around 65,600 to 66,000 in the immediate aftermath. The Japanese yen weakened from 130 per US dollar to 130.35 US dollars. Rate hikes are typically bearish for risk assets like cryptocurrencies, especially from the Bank of Japan, whose long era of ultra-low rates had supported global equity and bond bull markets. The positive crypto reaction likely stemmed from a key dovish element in the announcement: the Bank of Japan's decision to pause its bond taper. As Investing Live noted, quote, the bond taper pause from April 2027, fixing monthly Japanese government bond purchases to around 2 trillion yen, is the complicating factor. It removes a source of upward yield pressure at the long end and could be read as a concession to government concerns about borrowing costs, raising questions about Bank of Japan's operational independence, even as it tightens policy rates. By pausing the reduction in bond purchasing, the Bank of Japan is effectively looking to cap upward pressure in government bond yields. It's a little bit of yield control here. This may help keep long-term borrowing costs in check, supporting financial markets and providing a counterbalance to the tighter short-term policy stance. But overall, while the headline rate hike was expected, and it was expected, the dovish tilt on bond purchases likely helped soothe markets and fueled the bounce in Bitcoin. So what just happened? The bank raised rates but said that they are going to stop buying as much Japanese government bonds as they normally do. And those two pieces of news are acting in concert together. One, to get Japan up where they need to be because they've had ultra low rates for so long, but not freak the market out. So what did we just witness? Psychological market manipulation. I'm not suggesting that people go to jail for it. I'm just saying that the market is a giant cauldron of human psychology. And all different classes of people with all different levels of knowledge of economics and finance are all bubbling together in this stew that we call legacy financial markets. You can control how that cauldron bubbles by doing certain things in a certain way at certain times, given certain circumstances. And a lot of what we see, I believe, and I can't back it up, and don't ask me to, but my gut feeling is that market manipulation comes from a lot of different places. But I think most materially, it comes from the news and media and X and TikTok and whatever. the sentiment on the street is being manipulated by places like Bank of Japan. And there's nothing we can do about it until we rid the world of all federal governments everywhere all at once, which is probably never going to happen. Let's run the numbers. CNBC, futures and commodities, everybody is very, very hopeful for this Iran deal. And I can tell because Brent North Sea is down another 3.7% today to just peaking over $80 a barrel. West Texas Intermediate is down over 4.5 points to $77.06. Natural gas acting as a natural hedge. 2.5% to the upside. We're back to $3.22 per thousand cubic feet. Gasoline is down just over 2 points to $2.88 a gallon. Enjoy summer driving. Murban crude is down almost 6 full points to 72.63. Metals are mixed today. Palladium is down 0.25 point. Gold is down 0.14% to 43.45 and 6 dimes. Platinum is up 1.7, but silver is down 1/3, just below $70 an ounce. Copper is up 1/3 point. Ag mostly in the green today. Biggest loser is lumber, 0.25 point to the downside. Biggest winner is chocolate, 7% to the upside. The swings on cocoa is mystifying to me. I don't know what the hell's going on in the chocolate market, but I guess Willy Wonka is out there manipulating shit. Live cattle up 0.16%, lean hogs up 0.5%, feeder cattle up 1.5%, and the indices are mixed. S&P is down 0.25%, but the NASDAQ is down a full point. The Dow is up 2/3 point, and the S&P mini is basically moving sideways. $65,780 a coin is the price of Bitcoin. That is a $1.32 trillion market cap. And we can still get 15.2 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,043,413.64 of. Average fees per block are normal, 0.02 BTC taken in fees on a per block basis. There's about 48 blocks carrying 117,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Low priority will get you in at 0.8. And mining, hash rate is back at 923 exahashes per second. So we're picking up a little bit there. Oh, reminder, go to bitcoinandshow.com. That's bitcoinandshow.com. Click around. I got most of the time I will take a whole show and I will kind of condense it down into a readable, short synopsis of what's going on that day. Plus, there's a link to the actual show if you want to listen to the full hour. And I throw in some art. You know, I'm not an artist myself, but I use AI. There are some things that it's kind of useful for, and visuals are always useful. The one thing that I cannot stand is just looking at a blank sheet of screen with a bunch of black text on it and no visual stimulation whatsoever. So I do kind of try to make sure that I got some art in there for you. So go to bitcoinandshow.com. That's bitcoinandshow.com. And give me a couple of clicks there. From Tokenized Rug Pull, yesterday's episode of Bitcoin and Oak Grove with 8,000 sats. Thank you, my brother. He says, love the throwback episodes. Episode 0. Looking forward to the Spirko episode, which is where I found you. Layoff on SBF. Dude was playing a video game while pitching people. He is just so smart. He deserves to do whatever he wants to us cattle. You've got to understand that this is his world, and we are just living in it. Who the F thought they were going to get in on an IPO, much less SpaceX's, via some dumbass token? Again, giving credence to SBF bilking everyone. No shit, dude. William the French with 500 sats says, have you done any depth of dive on the Venice token ecosystem? I have not. And I'm not sure exactly what you're talking about. If you're talking about Venice AI, definitely not. If you're talking about like some kind of shit coin, I don't care. William the French with another 500 says, here's the article for the UBI model. Oh, and he's got a Patreon link here. Let's see what this is. New article about my proposal for a stock dilution tax and dividend from Scott Santons. I might have to look at that there, William the French. Progressively worse with 420 says, thank you. No, thank you. Jason High with 250 says, Pocahontas and Bernie Sanders are right. There should be no trillionaires. They fail to mention that there would be no trillionaires if the money supply wasn't inflated so much. $1 trillion today is equal to about $132 billion in 1973. Yeah, see, this is what I'm talking about. Noster Gang with 101 says, thank you. And Oak Grove with 100 says, regarding Saylor, he cannot be seen profiting from the fall of other companies that adopted a Bitcoin reserve, or his recommendation/advice will not be considered genuine and may be just part of a plot. Yeah, I can see that. Here's another thought that I had. What would happen if SpaceX bought Strategy and all of its Bitcoin? What would happen if there was even a tender offer from SpaceX to Saylor? What do you think Saylor would do? I mean, honestly, I do not put it past Elon Musk to do such a thing. I'm just wondering. So if you got any thoughts of what the fallout of something like that might look like, give me a boost to the show. Stream me sats. This show lives and dies on your donations. I do not have any sponsors. I do this because I love doing this. And I would love it if you were to say, hey, I got some value out of this today. Let me give you some value back on the value for value model, where you can basically directly support the people that you want to see succeed, bring you value, all that good stuff. And you can really only do it through Podcasting 2.0, kind of. Well, you can kind of do it through Patreon, but Podcasting 2.0 really is the future of all of this. And Podcasting 2.0 is the only way that you can stream Satoshis, throw me some sats via a boost. All that stuff is included in Podcasting 2.0 and a lot more. Chapters, chapter art, cover art. There's all kinds of stuff. Transcripts. I mean, it's like there's like 30 different things that Podcasting 2.0 brings to you that you do not get on your legacy podcasting app. Go find a Podcasting 2.0 app. I use Fountain.fm. If you go to Fountain.fm on any browser, you will get a link to be able to download that particular podcasting app onto your Apple or Android device. And that's the weather report. Welcome to part 2 of the news that you can use. BlackRock's new Bitcoin income fund offers cash flow alongside Bitcoin exposure. So it's brand new. It just launched this morning. Let's see what's going on here. Helen Braun is writing for CoinDesk. Opening for trade on Tuesday, BlackRock's newest Bitcoin exchange-traded fund, the Bitcoin Premium Income Fund, ticker symbol BITA, is less about market timing and more about meeting a growing range of investor needs as the asset class matures, according to Jay Jacobs, the firm's U.S. head of equity ETFs. Quote, "This is something we've had as an idea for a while. Irrespective of market conditions, you've seen that there are investors across the spectrum looking to generate some amount of income off of still having a mostly large, mostly long position to Bitcoin," end quote. Let's pause. Yield. It's yield. He says income, but it's really yield. It's another yield product. And I question the timing. I question the timing. Is this the appropriate time to start releasing this particular product? And my answer is that I don't know. I mean, honestly, if we were in the flat of a Bitcoin bear market, and we are in a bear market, there's headlines out there that are saying that we're out of the bear market and we're coming back up. Not so fast, buddy. We're in a bear market. We've been in a bear market. And if we're in the flats of a bear market, like the long flat in 2015, which is where my entry point in Bitcoin was, right around, I can't remember, September or something like that, 2015. It was a long time. That was in the flats for a long time before it started coming back up. It had been there for a long time, and people were getting, sentiment was, from what I understand, and I didn't know at the time because I wasn't in Bitcoin Twitter. I wasn't listening to the signaling. I didn't know where to go to pick up those signals. I had just bought Bitcoin because I'd been listening to Jack Spirko on the Survival podcast. And he was like the third touch point that I had to Bitcoin. And I was like, okay, I've got 3 different people telling me about the same damn thing. And it's happened over 3 different places and time in 3 different situations. So maybe I should actually look at this. And that's when I started looking at it. But I didn't realize that sentiment back then was horrible. It was really, really bad. And I didn't find this out until much, much later. But that was my entry point. And I was happy as a freaking clam. And I didn't know about any of the bad sentiment. I was like going, holy shit, this thing's really cool. And that was the flat of the bear market. If we're in the flat of another bear market, this actually may be the best entry point. But I don't know, because it depends on what the market actually does. Still, though, I always question yield products when it comes to Bitcoin. How are you generating the income? Do you own physical Bitcoin that you're loaning out to people and they are paying you interest on that loan? If so, that's credible income. That's something I can wrap my mind around. You may not like it, and I may not like it, but I can wrap my head around that. Otherwise, I have to ask, where is the yield coming from? And I'll bet you my ass that it's not talked about in the rest of this story. Continuing, the fund seeks to provide investors with exposure to Bitcoin while generating monthly income through a covered call strategy. BITA holds spot Bitcoin and shares of the iShares Bitcoin Trust and then sells call options on roughly 25 to 35% of the portfolio to collect premiums. Okay, so I'm wrong. They are telling us how they're generating the yield. The new fund offering comes as Bitcoin struggles to break out of a bear market, and then they do price action. We don't need it. Jacob said BlackRock sees several potential audiences for this new fund. One group consists of income-focused investors looking to diversify beyond traditional sources such as dividend-paying stocks and bonds. Another includes Bitcoin holders who remain bullish on the cryptocurrency but want to generate cash flow from their own positions. Quote, you could imagine this could be people who have a significant portion of their wealth in Bitcoin but would like to have an income stream to support their lifestyle, Jacob said. Then there's a third group, and they may be investors who have historically avoided assets such as Bitcoin or gold because they do not produce cash flow. Quote, we've encountered this type of investor for years. Quote, how can I own gold in a portfolio if it's not generating cash in any way? This product helps to address that market as well, end quote. While some IBIT investors may shift assets into BITA, Jacobs expects the fund to attract many new participants to the Bitcoin market. Quote, there are people who could move from IBIT to BITA, he said, but the income investor, primarily driven by income, or the sophisticated investors that need to associate a cash flow with an asset, those are probably not IBIT owners today. Jacob argued that the launch signals a broader evolution in how investors view Bitcoin. Quote, I think it is representative of the maturation of this asset, he said. The development of a deep options market around IBIT and growing investor understanding of Bitcoin have created demand for new ways to access the cryptocurrency beyond simple buy and hold exposure. Quote, it's absolutely a compliment to IBIT, Jacob said. Quote, the vast majority are going to want that tracking of the spot price of Bitcoin. But we've heard many views on how people would like to participate in this asset, and Bitcoin with supplementary income is certainly one that has come up many times across our clients. So they're generating yield by using covered call strategies, which is not loaning the Bitcoin out for people that want to create businesses and paying an interest rate on that loaned money. While it is probably from a legacy financial institution frame of reference, covered call option strategy is probably completely legit, completely valid. From a pleb's view, I look at it as, so you're generating income off of derivatives, futures, perpetuals, all of which are linked to the psychology of markets, which can change on a dime because, I don't know, the Bank of Japan decides to raise or lower interest rates. This, to me, is not a credible way to generate income. But that's why I'm not a billionaire. So clearly I'm wrong, because I just can't bring myself to think about playing these kinds of games. I just buy Bitcoin and I just hold Bitcoin. I don't want to be a financial genius. I don't want to spend my time learning how to become a financial genius. You know, I want to spend my time thinking about how to build stuff and not financial products, or not building structured financial portfolios that somehow or another have 35% covered call option ETFs that generate income on Bitcoin. It's not interesting, because if you're spending all your time chasing money, why do you want the money? I think there's actually very few people that find structuring financial products as their life's goal. Maybe getting a lot of money is their life's goal, and that's how they do it. But the actual function of doing that doesn't sound all that constructive to somebody's quality of life. Yeah, I mean, maybe a Learjet is critical to somebody's mental health. I don't know. But it just, honestly, man, it just seems like we could be doing, as a race of humans, we could be doing a lot with our minds. And what we really need is an asset that you can just buy and you can just hold, and nobody can deface or print more of or otherwise screw up. And we have that in Bitcoin, and we watch as the financial markets pull every trick out of the book to try to suppress price or manipulate price. And eventually that beach ball, it's not going to be held underwater all that long. And I think the ability for people to hold these balls underwater are becoming less and less from a temporal standpoint. I don't know. Because we got shit like Strive. They've acquired 73 Bitcoin for $4.7 million. They've pushed their treasury to 19,105 Bitcoin amid all this market turmoil. Micah Zimmerman, Bitcoin Magazine, the purchase was made between June 8th and June 14th, pushing Strive's total Bitcoin holdings well above 19,000. The acquisition marks continued methodical accumulation from a company that has built one of the fastest growing Bitcoin treasuries among publicly traded firms. Alongside the Bitcoin purchase, Strive's cash and cash equivalents also rose modestly from $139.2 million to $141.4 million, and the company's holdings of variable rate Series A perpetual stretch preferred stock of Strategy held flat at 505,000 shares, with fair value ticking up slightly from 47.2 million to 47.9. Strive's Class A common stock share count increased by approximately 483,400 shares to just under 70 million shares during the week, reflecting issuance through the company's at-the-market equity program. Class B common stock and the SATA preferred shares remain unchanged. The SATA stock, which is Strive's variable rate Series A perpetual preferred stock, has been a key instrument in the company's capital strategy. That's really what I wanted to talk about right now, and I need to get over to my trading view. I should have had this up because I want to look at SATA. Where is it? There we go. Okay, so SATA is a lot like Strategy's Stretch. It pays a dividend. It's pegged to a value of basically $100 per share. You get, I can't remember. You get like if you're holding it on some X dividend date, you'll get the dividend. But Strive has changed their payout, and it looks like as of, let's see, when is this going to happen? Okay, as of Monday the 15th, Strive changed from paying out, I think, bi-monthly to paying out every single day. And right now, it's actually pegged almost exactly where it should be, $99.96 per share. As opposed to Stretch, which has lost its peg. Of course, it's past its ex-dividend date, so now people are basically selling it back down. But as far as the dividend date, which was yesterday, Monday the 15th, they did not strike back to $100 per share. So Stretch is having some issues, yet this SATA stock from Strive is still being able to hold its peg. And I don't know why. Again, this is this financial instrumentation engineering that I just don't think that this is healthy. I just don't think it's healthy for Bitcoin. I think it's not healthy for markets. I don't think it's healthy for people's psychology. I don't think it's healthy for these companies' bottom line. I think they're playing with fire. And it doesn't matter how big or small they are, they're all playing with fire. So who knows where this is going to go, but in the midst of all this, Strive did purchase yet another 73 Bitcoin. Ledn is a Bitcoin lender, and they say Bitcoin-backed lending market could reach $1 trillion as securitization attracts institutional capital. James Hunt from The Block is writing. Ledn co-founder Mauricio Di Bartolomeo projected that the Bitcoin-backed lending market could grow to $1 trillion in the next 5 to 10 years, arguing investment-grade bonds can unlock institutional investment in the sector. Ledn issued Canada's first Bitcoin-backed loan in 2018, since becoming one of the sector's largest lenders. The company estimates it now accounts for roughly 30% of the global market, originating $1.4 billion in loans during 2025 all by itself. However, the crypto lending sector remains contentious after suffering significant setbacks in 2022 following the bankruptcy of firms like Celsius, BlockFi, Voyager Digital, and Genesis. In an interview with The Block's Gareth Jenkinson at BTC Prague last week, Di Bartolomeo said no single balance sheet could provide the liquidity needed to support a $1 trillion market. Instead, he pointed to mortgage and auto loans, where roughly 60 to 70% of mortgages and about 25% of auto loans are securitized and sold as bonds, as a model to follow. Ledn's thesis is that packaging Bitcoin-backed loans into similar products could allow lenders to tap the multi-trillion-dollar market asset-backed securities market and attract institutional capital to that sector. In Quote, in order to get a bond that's meaningful, you need size. You need at least $200 million. And you need a rating, he said, highlighting Ledn's own recently issued bond product that uses Fidelity as a custodian and Jefferies as the book runner. According to D. Bartolomeo, it was the first Bitcoin debt instrument rated by S&P Global receiving an investment grade rating. An investment grade rating is significant because many institutions, including pension funds and endowments, allocate capital specifically to investment grade debt securities, potentially opening a different pool of funding than Bitcoin exchange traded funds or strategy style preferred stock offerings. Quote, we were marketing this bond during February, which was during the correction. The very interesting thing was during these meetups, a lot of investors who hadn't bought a Bitcoin instrument before were worried about how the system would work in a downturn. And here they were reviewing the deal during a downturn and seeing zero loan defaults in the middle of a Bitcoin drawdown. And that made them feel a lot more comfortable about our processes, D. Bartolomeo said. The Ledn co-founder said the bond ultimately ended up 3 times oversubscribed. Quote, if we do this right, we believe we have a big opportunity to open up that market, price it correctly, and use that benefit to basically deliver cheaper rates on our loans over time. All right, so it's instrumentation. It's Bitcoin bonds and Bitcoin-backed loans. The one thing that I'll say about Ledn is that so far, they have been pretty rock solid. I was on a podcast in 2018, and I don't think it was D. Bartolomeo that was on that other on that same podcast with me. It was Adam. God, I can't remember his last name right now. He was one of the guys from the Bitcoin group back in the day. We're talking podcasts from the 2015, 2016, 2017 era, and in 2018. Adam, by that time, he had started doing his own show alongside other things. And he asked me to be on his show, and he had like 2 other people, and one of them was from Ledn. And I have to say, I got nothing but good vibes from the guy from Ledn. They were really trying to make an actual lending product from Bitcoin way back then. And they did. And they seem to have done okay. They haven't filed for bankruptcy, and I haven't seen woeful stories of yore about people having Ledn-backed loans getting wiped out. So far, Ledn seems to be one of the more solid Bitcoin-based lending companies that's out there. I mean, they're clearly not a sponsor of the show. I'm just saying. There are 2 kinds of lending companies on Bitcoin. There's BlockFi, which basically lied to everybody and bought advertising on every single podcast that they could possibly find, except they never called me. And then there's people like Ledn and River and I think River makes loans, and then like Unchained Capital out of Austin, Texas, who does definitely make loans. And they're Bitcoin only, and they're Bitcoin focused, and they're run by Bitcoiners, and they didn't do the stupid shit that BlockFi and a whole bunch of that style of lending company was doing. And all of their lenders got liquid, or not lenders, all the people that they had loans with, they all got liquidated when the FTX stuff blew up. And we knew that was going to happen. We were warning people way back then that there was something very, very wrong with what was going on with BlockFi. And it blew up, and everybody got wiped out. So if you need to take a loan, you really need to learn how to look at the company that is behind that loan. Who works for them, and what's their history? Are they shitcoiners? Because that is a red flag that you're going to have your shit liquidated on you. Be careful out there. Coinbase and AWS enable publishers on CloudFront and WAF to charge AI agents via their X402 protocol. This is Naga Avan Nomeo out of the block. Coinbase and Amazon Web Services are letting publishers using AWS CloudFront and Web Application Firewall charge AI agents for content access through the X402 protocol. The integration covers infrastructure AWS says powers roughly a quarter of the internet, according to the announcement on Monday. Publishers can toggle the feature on within their existing AWS configuration without new accounts, invoices, or API keys. When an AI agent requests content, the server returns an HTTP 402 payment required response specifying the price. The agent can then pay using USDC on Base, after which Coinbase's X402 facilitator verifies the payment on chain and the content is then served, all within a single request cycle, the crypto exchange stated. The new service supports per request charges, batch settlement for high-frequency micropayments, subscription models, and variable rate pricing for usage-based workloads such as inference or compute-heavy API calls. Quote, content owners and publishers want to enable their users and their agents, not block them, said Nishit Swahini, general manager of AWS Edge Services, adding that the integration lets the companies determine an agent's identity, intent, and payment authorization before serving any content. Coinbase incubated X402 before spinning governance of the protocol out of the X402 Foundation under the Linux Foundation, with AWS among more than 20 founding members spanning cloud infrastructure, AI, and financial services. Publishers enabling the feature can list their endpoints on the X402 Bazaar, an open registry of X402 enabled services, or on Coinbase's curated agentic.market. The launch extends a build-out that has moved quickly over the past several months. Previous coverage from the block reported Stripe's X402 integration for billing AI agents in USDC in February, the protocol's V2 multi-chain upgrade in December, and the launch of agentic.market in April. Coinbase also rolled out dedicated agent accounts under its Coinbase for Agents product earlier this month, building on X402 support and prior work on agentic wallets, with more than 10,000 merchants already integrated into the protocol. So that's the end of the article. So what did we just talk about? Think about a magazine and or just, I don't know, a Wall Street Journal article somebody sends you a link to. But you don't have a subscription to Wall Street Journal and you've already burned through your 4 free articles a month, or however they do it. You know, some places give you, hey, you get 6 free articles a month, and on the 7th time we ask you to pay a subscription. This one seems to me that what they're enabling through the X402 protocol and Coinbase is that somebody like the Wall Street Journal can say, look, you burned through your 4 free articles a month. This is your 5th article. Here's an invoice for your AI agent, or the AI agent when it says, hey, I represent this IP address and I want to read this article. You know, the Wall Street Journal says, yeah, but your guy that owns you has already burned through their 4 free articles a month. You're going to have to pay for this one, not a subscription, but for this particular article. And the AI agent says, great, I got a USDC wallet right here burning a hole in my pocket. How much do you want? And through the X402 protocol, an invoice is sent, the AI pays it, and then the AI agent brings it to the owner of the AI agent and says, here's your article. I've been wanting something like this for articles for a long time, because you try to, go to Forbes, and if you don't have a subscription, see how many articles you can read. Same with a whole bunch of these guys, right? They're all like this. They want a subscription. They want a credit card number and they want a monthly fee. And I'm like, dude, just give me a Lightning invoice. The thing that I hate about this is that it's Coinbase and their X402 protocol and using USDC, because this is, well, they should just be saying you can use a Lightning invoice, or you could use USDC, or you can use this. But right now it's just USDC, which means that the market is being driven towards the use of stablecoin, which drives the use of what? The United States dollar. Coinbase is 100% firmly in bed with the USG. Dollar dominance reigns supreme. And it rains down from on high, and as you know, shit always rolls downhill. So while companies like Coinbase are left to flourish, and they are flourishing, we're going to end up having to put up with shit like this. USDC, USDT, although I'd rather use USDT than USDC, but that's another story. I don't use either of them. But that's what this is. And it's half of me is like, thank God finally. And the other half is like, dude, just give me a lightning invoice. Why all this? Why go to USDC? And again, my fallback position is because the government wants it that way, because USDC basically represents the US dollar. And if you use USDT or USDC, you're bolstering the usage of the United States dollar. And that's what they want. And they being the government, they being the bankers, they being anybody whose power is directly connected to and dependent upon the US dollar. And that's a lot of people. And they have a lot of power. They got a lot of say-so. So it's the environment that we live in. I told you that stable coins are a dream come true for the United States Treasury, the CFTC, the SEC, the executive branch of any administration, because it's like the dollar, as long as the dollar is in power, the United States remains in power all over the world. And stable coins is a way to export debt, the creation of US dollars by printing of treasury bonds to the rest of the world, instead of directly giving it to United States banks and therefore United States citizenry, which causes general inflation to occur much quicker. This time we can export it across the world to where it will take time for the boomerang to fly back to us. But those chickens will always come home to roost. The more bonds you print, the more dollars need to back it up, and the more stable coins are printed in return, which is why people that think that buying Tether is like buying Bitcoin back in 2015 is not correct. Stable coins inflate at the same rate the United States dollar does at minimum. Because you never know. The rehypothecation of dollars is not outside the realm of possibility. We've rehypothecated everything else. Why not print more Tether and more USDC than there are actual dollars in the world? It wouldn't be out of character. That's for damn sure. So I wish that X402 and that foundation would get off their ass and start using stuff like eCash and Fedimints and Lightning and all of that stuff. I just not going to get my hopes up that they do that anytime soon. I think they're just too linked in with the power structure of Washington, D.C. right now. One of these days it may change. I don't know when, but one of these days it may actually change. So that is all the news that you can use for today. I hope you enjoyed it. If you did enjoy it, if you did get any value out of it, please consider making a donation to the show using Podcasting 2.0. Means you can just listen to the show and just hit the boost button and throw me, 10,000 sats. Say, hey, I appreciate you doing what you do and I got value out of it. So here's some value back. That's the way the value for value model works. So consider it, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.